Hello, in this presentation we will set up a new company worksheet within Excel. A new company worksheet will be used in order to enter a comprehensive problem for a new business, working the transactions of the bookkeeping of a new business within the Excel worksheet. This being closer to doing the process by hand, doing the process with paper and pencil, a process that is much more transparent and will allow us to see all the components and the working parts of putting together the books for a company. As we do this, we will compare and contrast that to accounting software such as QuickBooks, and in so doing, we'll be able to see how QuickBooks processes some of the activity and therefore be better equipped to use accounting software such as QuickBooks. First thing we're going to do is set up the new worksheet, and we'll compare and contrast that to setting up a worksheet within QuickBooks, meaning setting up a new file within QuickBooks. What's the first process, and how can we do an equivalent process when we set up something in an Excel worksheet? More of a setting up by hand or by paper and pencil type of process. When we set something up in QuickBooks, we typically have a shortcut within QuickBooks that really helps us with the setup process, and that is we essentially tell QuickBooks, this is the type of business we are. We're a merchandising business in this case, and we have services as well, meaning we sell stuff. In our case, we're going to sell guitars. And we also have services. Therefore, telling QuickBooks that, QuickBooks can automatically generate what we will call a chart of accounts here, and just give us chart of accounts that we can start working with. We can start building our transactions with this automatically generated chart of accounts. That, in essence, is what we will first have to generate within our Excel format to work the problem forward. So let's see what QuickBooks did when we just tell QuickBooks, hey, we're a merchandising company, give us a chart of accounts. QuickBooks spits something out such as this for the chart of accounts. We have the type of accounts and we have the name of accounts. I'm first going to go over the account types because this is really the driving factor in terms of how QuickBooks will record certain transactions and the ordering of the chart of accounts. It's going to be in order, in essence, by the accounting equation first, which is assets equal liabilities plus equity, and then equity is broken out between equity and then income and expenses. So in essence, first we have assets, liabilities, equity, then income or revenue, and expenses. That's going to be the order of these accounts. Then within that, QuickBooks breaks it down even further. It'll break it down first to cash and then to accounts receivable, two accounts we don't yet have here in the QuickBooks example, haven't set them up yet. And then it's going to go to other assets, fixed assets, other current, that's going to be it. That'll be it for the assets. And then we're going to go to liabilities, which is going to break out to other current liabilities. And then we would have long-term liabilities or other liabilities, if there were any. There are none at this point. And then we have the equity type of accounts. Then we have the income or revenue type of accounts. Then we have the expense type of accounts, starting with the most important expense type, that of cost of goods sold, followed by all the rest of the expenses. If we look at the accounts over here, we note that they are not in order by alphabetical order. We have an account that starts with A, but then it goes to furniture and then something with an S over here and whatnot. So it's not in alphabetical order. It would not be in order of account number, not primarily, although if we were to set up account numbers and do it well, we would set up the account numbers to follow the same ordering of the account types so that it would, in essence, look like it was in order by account number. But we're first being driven by the type of account here. Within the type of account, if we don't have account numbers, it will then order within that type in alphabetical order or in the order of account numbers if we choose them. Meaning, for example, if we have all these expenses here, within the expense section, we have it in order of the alphabetical order from that point forward. So that's going to be how it will be set up here. If we look at the accounts, we have accumulated depreciation, we have furniture and fixture. These are going to be fixed assets. We've got the security deposits, which is going to be an other asset, payroll liability. That's going to be a liability. Opening balance, draws, and owner's equity, our all equity accounts. Then we've got the merchandise sales revenue or sales discount. We've got the fees, and then we have all the expenses here. This is what we're going to set up now within our Excel format so that we have these accounts that we can use in order to work transactions. As we set up Excel, I'm not going to go through the actual setup of the whole process. I'm just basically going to go over the worksheet that we will be using and then look through that worksheet. If you'd like to get something on in terms of how to set up this whole worksheet, then we can do that at a later time. But for now, we're going to go over its components and then use a worksheet like this in order to see the detail of the transactions that would be done within accounting software. In essence, we're going to start with a chart of accounts. This chart of accounts is just a list of accounts, and again, it will be in order by assets, that in our case will be in green, and then liabilities, then equity, then income and expenses. It's not further broken down into any subcategories here, although it's going to be in a similar order. Typically, the idea would be that we would want it to be in order of liquidity for the assets and things like current liabilities before long-term liabilities for the liability type of accounts. So it doesn't necessarily have to be in alphabetical order within the types of accounts. For example, all the expenses don't necessarily need to be in alphabetical order. That's going to be the default for most accounting software, and if you wanted to deviate from that, you can use account numbers, and the accounting software will then order by the accounting numbers within each subcategory. So our first goal is just to list these accounts, and we would just put the accounts here and list them out. Now you might be asking, where would we get this chart of accounts? And like QuickBooks, QuickBooks is in essence compiling the data of the common accounts for a type of industry. So if we choose a merchandising type industry, someone who sells inventory, we can get a pretty good idea of the type of accounts. For example, every company is going to have a checking account. Every company is going to have accounts receivable pretty much, meaning people that owe them money. And then we're going to have inventory assets. If we sell stuff, we're going to have inventory. And then we have prepaid insurance. This was something not on the chart of accounts. This is actually a more comprehensive chart of accounts here than we are starting with, than we just looked at in terms of the QuickBooks file. But we're going to add a few more of these accounts here. And then we got the short-term investment, undeposited funds, accumulated depreciation, furniture, and fixtures. Now, some of these we may not, when we first start out, have included. We may not have them there. And we may not have, we could start recording transactions without any accounts, any chart of accounts, and just add them as we go. But that's a little bit more difficult of a process because then we have to add the accounts each time. So what we're going to do is we're going to put all the accounts in place, or at least most of them, and then go through and record these transactions. Then every account's going to have, every company pretty much has an accounts payable. We might have a credit card like a Visa account. We're going to have interest payable, which we're going to use later, loan payable, we're going to take out a loan, payroll taxes, unearned revenue, loan payable, and then we have the equity section, and that's going to be the draws and the equity. We will be a sole proprietor. And then we have the sales, merchandise sales, and the rent on the music, service, this is all revenue. And then the expenses, cost of goods sold, and all the other expenses. That will be our list of accounts. Now here we're also going to include the general ledger. And this is something that's not often seen within QuickBooks, because within QuickBooks, we typically jump right from a data input like writing a check or entering an invoice to the financial statements, and then QuickBooks or some accounting software will just generate the financial statements, and we don't need to take a look at the other steps. We just say, hey, I just entered a check. What did it do to the balance sheet? Or what did it do to the profit and loss or the income statement? But if we get an idea of the process, how to set it up, then we'll see how this stuff is built. That's what we get from working it more in a paper and pencil format, more in an Excel format. And the fact that we can automate it is, of course, great. Once the data is input, then we can set up, as we'll see here, we're basically setting up a program to just automate everything that happened and generate the financial statements. But if we understand what the actual steps are in that automation process, then we can go back when there's problems and we can see what QuickBooks is actually doing. We can interpret what is happening. We can better interpret the financials that are made. And if there are a problem in the financials that are made, we can better troubleshoot that problem and figure out what is going on and what went wrong. So the chart of accounts then, or the general ledger, is going to be just the same accounts, same order. We have the checking account, accounts receivable, inventory, prepaid insurance, checking account, accounts receivable, prepaid insurance, and inventory. And then it goes the assets, liabilities, equity, revenue, expenses, assets in green, liabilities in orange, and then we've got the equity, and then we've got the revenue and expenses. So this is a long, intimidating looking worksheet, I know, but all we did was put it in the same order, and we gave some more space here. Why do we need this other list of accounts if it's the same list of accounts as over here? Because this will give us the detail. It'll give us an ordering by date. As we enter transactions, we're going to say, hey, what happened to cash by date, by order of transaction? And then it'll give us a running balance over here and tell us what that ending balance is. And that ending balance ultimately will be what is on the balance sheet, what we use to create the balance sheet. However, to create the balance sheet, we typically would make a trial balance, record it on the trial balance, and then use that trial balance to create the balance sheet. So all these accounts over here are just the same accounts as over here. They're going to give us the detail of the transactions by date of transaction, give us the running balance and the ending balance. That ending balance then used to create the trial balance. So these amounts here are just being generated from the general ledger within the trial balance. And then the trial balance will be used ultimately to create the financial statements. So these financial statements, it's hard to see when they're all zeros, but we will see as we go, are being generated from the trial balance. And that's the same automation that, in essence, the accounting software is doing. That's what allows us to go from just entering a check and just jumping over here then to the balance sheet and say, hey, what happened to cash in the balance sheet when I just wrote that check? It's really going through the detail. If there's a problem, if the balance sheet doesn't look right after we wrote that check, what are we going to do? Well, we're going to go back to the general ledger. We're going to look at the detail and say, hey, where is that check? How come it's not appearing as I believe it should be? And it's probably going to be a date issue if that's happened. And then we'll go through and take a look at that. So that's in essence what we're going to do here. As we build this, it'll give us a better idea of what QuickBooks is doing. As we do that, then we're going to record transactions with the general ledger, with the general journal that will then be posted to the general ledger to create the trial balance and the financial statements. So we'll compare and contrast common type of transactions within QuickBooks. And those types of transactions are things like making an invoice, writing a check, making a bill. And all those transactions within QuickBooks, it's set up, or any type of accounting software, so that we don't really need to know debits and credits. We don't really need to know what's going on with it, how it's being recorded. All we need to know is how to put in the information to enter an invoice or write a check. And QuickBooks automates all the rest of it. What we will do here is we'll do the journal entry that QuickBooks in essence does when we write a check, when we create an invoice, when we enter a bill, and then we'll go through and post it to the general ledger and post it to the trial balance and see what happens to the financial statements and get an idea of how the whole thing will be built in a process that will be closer to done in a paper and pencil process, this transparent process, and that'll give us an idea of what is going on within a computer system. This will help us out if we're, one, an accounting student and we're going to something that we learned theory and going to QuickBooks or some accounting software and trying to see what the software is doing, or if we're someone who has learned a lot about accounting, a lot about how to enter transactions and work with programs such as QuickBooks, and now we want to have a better understanding about how to work the data better within QuickBooks, how to set things up better, how to see how things work. This will give us an idea of how things are working within the QuickBooks program. Or if we're just someone that wants to that's running a small business and we're using the software and we want to get a better idea of what the software is doing so we can troubleshoot types of problems.